Special coverage from the New Orleans Investment Conference is brought to you by First Majestic Silver Corp. There's no substitute for silver.
Hello and welcome back to Soar Financially, here from the New Orleans Investment Conference. My name is Kai Hoffman, I'm the EdJR mining guy over on X, and of course, your host of this channel. And I'm joined by none other than Mike Maloney. Mike, it is such a great pleasure to have you sitting here in this chair. You're the founder of goldsilver.com. You're an accomplished author, best-selling author. The latest book is The Great Gold and Silver Rush of the 21st Century. We'll get to the content of the book and how it applies to what we're doing and talking about today in a minute. But first, just thanks for being here.
Well, thank you. This is actually the first time I've been to the New Orleans Investment Conference, and it's actually quite something. And you know, we've had such a run-up in gold and silver recently, so there's an excitement going on here that is great to see. All of the things that I wrote in, my first book, I was with Robert Kiyosaki and the Rich Dad Group, and so it was written from 2002 through 2007, and it came out in 2008. And all of the things that I wrote about then, and the things that I wrote about in my last book, which came out in early 2023, are starting to come true right now. And it's time to get prepared, that's for sure.
Let's dissect that together a little bit. Let's start on the macro side. We'll make our way down to the micro, meaning the precious metal prices and price moves. But maybe on your assessment, 30,000-foot view, like what's the state of the economy? What's the state of the financial markets?
The state of the economy is, I hate to say it, we're screwed. That's what it. You look at what every president has done, and they run on a platform. They're going to reduce the budget deficit. They're going to balance things, and then as soon as they get into office, they go exactly the opposite direction, because the population likes it when you're handing out free candy, and that's basically what they're doing. Is they're keeping the population appeased at the expense of I hate to say it, but I do think that we are headed into a huge global financial crisis. In 1929, the stock markets were in a bubble. In 1966, stocks were in a bubble, and they worked their way off. The Dow bumped its head on 1,000 points in 1966 and couldn't break out until 1982. So stocks went sideways during a period of raging inflation. And so corporate profits and stuff went up during that period of time. And so all of the PE ratios and the indicators that tell you whether stocks are in a bubble or not worked themselves off. So we had a correction without a crash. But the first time it was stocks moving, gold was fixed, and real estate was not in a bubble. The second time it was stocks, real estate was not in a bubble in 1966 to 82. And then we had the NASDAQ, the tech bubble of 1999-2000. Again, stocks in a bubble, but not real estate. And then it was both, from 1971 to when gold became free trading, it was only gold moving that caused this correction in the gold to the Dow gold ratio, the stock market to gold. It was only gold moving. This time it's both. Gold and the markets are moving. We've got, in 2008, the global financial crisis, stocks had already been beaten down from the 1999-2000 tech bubble popping. And so stocks were just above, the stock market was above fair value. It never was allowed, Ben Bernanke papered over all the cracks, and it was never allowed to go to undervalued so that we built a solid base again. What they did was they just, as everybody knows, created tons of currency. They exceeded my wildest nightmares because I had written all about this and about his response to the next crisis in my book that came out just months before it all happened. But this time, stocks are in a bubble, bonds are in a bubble, and real estate is in a bubble. And these are bubbles of historic proportions. The only way that you can measure the stock market that shows it not in the greatest bubble in history is PE ratios. All of the other measures, the Buffett indicator and the different ways of measuring it, all show it in the greatest bubble in history. Real estate, same thing. And then bonds, we had a bull market in bonds from 1980 until just the past couple of years. So bonds are also
it's
in a
bubble.
bubble.
40-year bull market in bonds, right?
Exactly. And so when these, you can't have something go into a bubble where it's out of whack with the rest of the economy permanent. It can't stay there permanently. Something has to happen. Either the economy has to grow to match it, and that's not very likely, or there has to be a crash, a correction. And so we're going into this next big crisis with $38 trillion worth of debt, and with the Fed's balance sheet already expanded so much. In a 2015 update to my first book, I wrote that the next time that they do QE, they're starting it from a base that is already so high. There was $800 billion in the bank reserves and in base currency. Base currency is the cash in your wallet plus bank reserves. And it peaked at $9 trillion. And so we're off the rails.
Yeah. Oh, we definitely are.
Yeah.
We definitely are. But then again, it's like, how much longer can it continue? Kicking the can down the road? Because we were sitting here. Fortunately, gold is caught up now. Otherwise, people would call us liars. Right? Like,
yeah,
so,
gold is it's the alarm bells going off right now.
I was going to say, like, what kind of signals do you take away from that? What is gold and silver signaling, and gold in particular probably signaling to you right now?
Central banks are still buying. It definitely has not peaked. In this last run-up, it was basically Asia and a little and India pushing the gold price, and it was physical demand instead of all the gambling on the commodities exchange and the LBMA. And so it's telling me that we're getting closer and closer to a crisis, and it's impossible for bubbles to just go on forever. So we're at a period of time where they are trying to kick the can down the road, but with things at the extremes that they are at right now, I'm expecting something within the next year or so. I'm actually surprised that we got through October with no big event. October is always that spooky month.
Always something, a black swan. Loves October.
Right, yeah.
Right? Now, how much cushion do you think there is in the system? Like you mentioned the Fed balance sheet, you mentioned the $38 trillion in debt. Is there even any cushion left to absorb a massive shock that you're hinting at here?
Well, the thing I wrote when I updated my first book in 2015 was that they're going to need to do the same percentage increase, not the amount of printing, the QE, but the percentage increase to try and stave off anything. But remember, like I said, in 2008, the stock market wasn't in a bubble. That was a real estate problem only, and it affected the stock market. This time, it's real estate and stocks, and it's turning out that everybody was expecting commercial real estate to do a correction. Well, that has all been put off with forbearance and rewriting the mortgage agreements, and that is all over with now, and they can't really kick that can down the road any further. I'm really expecting something horrific, actually.
Well, we're seeing some cracks on the subprime market, the auto subprime. We've been seeing that just the last few weeks sort of seep through here. $1.7 trillion subprime lending market on the auto side. Is that where you're looking for cracks? Is that maybe potential domino?
There's the number of repossessions of cars has just exploded, and then the number of people searching, internet search terms for help with mortgage. The search terms for. Do you remember during the 2008 global financial crisis? There was jingle mail. You put the keys in the envelope, you mail them back to the bank. The house is theirs. So all of these search terms for things that nobody should be searching for how to consolidate debt, manage their mortgage payments, how to give their car back to the bank if the economy is healthy. It's not healthy. The underlying economy has, the stock market completely detached from the real economy a couple of years ago. And everything is like fake right now.
It definitely feels like that. And now gold, you touched on gold is telling us something here, but the run-up in gold was quite significant. Like, was gold outperforming maybe the expectations when you look at price performance versus underlying, let's say, economy or markets? Because the move was quite violent.
It was nothing compared to the final months of 1979 and the first month of 1980. It was an insignificant move. Actually, in my book, The Great Gold and Silver Rush of the 21st Century, I quote several articles from Time magazine back then, and there was an economist from the 1800s. His last name was Giffen. I can't remember his first name right now. But he proposed that there's a certain class of goods, Giffen goods they're called, that where price-demand balances don't work. It's exactly the opposite. So as the price goes up of something, usually anything, there's less demand because people they look for a less expensive alternative. Gold and silver violate that, and we just saw that with this run-up. This run-up was largely caused by physical demand in Asia, Australia. It was interesting in the United States, we weren't participating yet. In fact, there was a lot more sales than buys, and refiners in the United States got all clogged up.
I've been hearing in the month of August, a lot more selling than buying because gold shot up. That's what I'm hearing from the bullion dealers.
Yeah, they think they're taking pride, and the people that are selling are going to regret it one day. They really will. It is sad to see the East buying and the West selling because it's a wealth transfer that is going on. And we are nowhere near the top of the precious metals markets. And the things that tell you that are things like the Dow-gold ratio, the gold-silver ratio. In 1980, when gold and silver peaked on the same day, the ratio between gold and silver took 14 ounces of silver to equal the value of 1 ounce of gold. And that is about the natural ratio is that there's about 19 times more silver in the Earth's crust than there is gold. Silver tends to occur more up toward the surface and gold is deeper. And so when we would dig it up back then, the reason that the gold-silver ratios averaged about 15 to 1, somewhere between 13 and 16 to 1 all over the planet, was simply because if you've got a certain number of coins in circulation, you got 13 of these silver coins for each one of these gold coins in circulation, it's the free market. Yeah. Finding this equilibrium, the exchange rate. And right now, at 85 to 1, I think is what it's at. And during COVID, it shot up to 120. Silver has never been that cheap compared to gold. And I do believe that you are absolutely going to see the gold-silver ratio at 20 or less. So that means silver's value rises compared to gold.
So it doesn't mean gold is coming down, and you think silver is catching up or maintaining.
Exactly. Well, this is exactly what happened back in 1979. Silver lagged for the bull market of the 70s, and then just suddenly, when gold started becoming perceived as too expensive, and today, $400 doesn't sound too expensive. But you got to remember, before 1980, the average income in 79 was like $9,600 a year in the United States. And so gold had gone from $35 in less than 8 years, $35 to $400. And so the average guy, if he's in his 40s, $500 may have been the majority of his savings. I don't know. But he goes into the bank, takes out $500, rushes to a coin shop and says, I want to buy gold too, and they drop one coin in his hand. And at that point he goes, oh, is that all I can get? How much is the silver? And it's when the public changes their preference from gold to silver that, people blame the $50 silver price in 1980 on the Hunt brothers.
Yeah.
And it's absolutely not true. They added 50 to 75 cents at the most to that market. It was really the public changing their buying preference, silver being perceived as a better bargain.
Talking about buying preference and sentiment, the banks are changing their tune towards gold and silver right now. JP Morgan, Morgan Stanley was the famous one saying, well, maybe you should consider 60-20-20 as part of your portfolio construction, 20% being gold of that. Right. So are we seeing the same mindset shift that we're seeing?
JP Morgan say prices as high as $10,000.
Yeah, exactly. Jamie Dimon.
And And so this is a major shift, and it sort of signals that we're probably going into the third and final phase of the bull market, which is the greatest gains in the shortest period of time, usually. The bull markets have 3 phases. And this final phase, like I said, greatest gains in the shortest period of time. Well, what are the gains that we've had so far? We've gone from 250 to 4,500 bucks an ounce. These are some huge gains already. If you look at the, we created an interactive chart where we overlaid the bull market of the 70s with the bull market of today, and then there's something called Elliott wave analysis. And you take these waves. The first wave, the wave, I can't remember whether it's A, B, and C, or if it's 1, 2, and 3. But
I think it's 1, 2, 5, up to 5, right? Is it? Okay. I'm not an expert.
1, 2, 3, or 1, 2, 3, 4, 5. Yeah, it's either 3 or 5 waves. When we match the very bottom and that top up, it was projecting that this bull market would be 2.6 times greater in magnitude and 3.1 times longer than the 70s bull market. But it was projecting $9,000, $10,000 an ounce gold. And it's interesting to see these major banks and financial institutions, they were telling you to stay away from gold when it was 250 bucks. And now that it's $4,000, they're saying, oh, maybe you should put 20% of your part. Why? Because it's been the #1 performing asset class of this century, since the year 2000. The only thing that has outperformed precious metals is cryptos. But if you start at 0, from 0 to 1 is an infinite return. So cryptos have done spectacular. I've been in them since 2014. I told my insiders about it and recommended that they take a position in cryptos. But as cryptos go up, I sell some and I take profits and turn it into silver. So I think that we have some spectacular times ahead of us. Now, can you imagine if Morgan Stanley is the 60-40 portfolio with 60% equities and 40% bonds, and they're saying sell half of your bonds and convert that into gold. Now, if that happens, you're talking prices way north of $10,000 an ounce.
Just the amount of trillions of dollars. What's the global bond market, or even the retail bond holdings?
It's huge. My research assistant, Alan Hibbard, who is a co-host on my YouTube channel, he's done the calculations.
Yeah. I just think for some reason the $9 trillion pops in my head, but I might be wrong on that. So don't quote me on it, please. Right. But that's the number that pops into my head. So,
so that much currency rushing into gold is something. We're just at this point in history where everybody is looking for trust. And gold is you hear it all the time. It's the only asset with no counterparty risk.
No, it's true. It's absolutely true. And the central banks are buying, like geopolitically, we're being told to buy it anyway. And then the dollar is doomed, as we're being told.
That's going to take a little while. But what's interesting about these types of processes is they go along very slowly until the day they don't. And then suddenly everything becomes very fast.
Yeah, little by little by little, and then all at once.
Exactly.
Right? Andy Schachman likes to use that, and was that Hemingway who originally said it. So no, it's.
How did you go bankrupt or broke?
Yeah,
well, little by little, and then all of a sudden.
All at once, exactly. I think that's what we're seeing here as well. In terms of silver, we're at 40% right now, year to date. Gold is also at 40% year to date. So silver is still trailing gold. is what sort of I'm taking away from your commentary as well. You're going 1 to 15 ratio, 15 to 1 ratio.
Well, I own 300 ounces of silver for every ounce of gold that I own, because I've allowed the gold-silver ratio, I don't let it dictate anything to me, but at the same time, I pay a lot of attention to numbers, and I try to keep emotion out of my investment decisions. And with the gold-silver ratio, at these absolutely absurd, I mean, if you look at it, for 2,500 years, it was about 15.
Yeah.
And suddenly here we are in just the last century where we're visiting the levels of 100. So silver is just way, way undervalued. And so I believe that for every, if it's at 80, if you buy an ounce, if you buy 100 ounces of silver, you're going to be able to exchange that at 20 for 4 times more gold than you paid for, basically. So.
You were talking about like we are in a death spiral, like we're doomed. Any way to break out of it?
Well, you know, if the world's central banks seem to be positioning to remonetize gold. Trump, when he first took office, was let's audit Fort Knox, let's make sure the gold is there. There were all these signals that we could potentially end up on some sort of gold standard again. The problem is, with the levels of debt we have, I believe it's like $140,000 an ounce to pay off the national debt. And revaluing it to current market levels isn't going to make even a dent in the current national debt. And so it would have to be at prices far higher than that. The problem with that is it will upset the world economy so much. There's going to be some sort of giant convulsion that we go through. But in my book, The Great Gold and Silver Rush of the 21st Century, I sort of lay out we had the classical gold standard from the late 1800s until the end of World War I. And then we went on something called the gold exchange standard between the wars. And then we went on the Bretton Woods system from 1944 to 1971. And now we're on the global dollar standard. And these are vastly different monetary systems. It's not the same at all. People just don't, the common man was unaffected by these changes because they were little baby steps off of gold. So you went from something that was rock solid to a little less of that something to less to none. And so now it's just air. It's faith that the dollar is going to buy you something tomorrow because it bought you something today. And I believe that now we're going to take this huge step from nothing back to something, and that is going to affect everybody on the planet. Every person will feel it.
I was just going to ask, what happens if one country or one currency is all of a sudden at least partially backed by gold, for example? It doesn't matter who it is. What would happen? What would be the signal?
Well, I do think that would attract more trade in that there is trust with that country's currency. So you're talking.
Can I expand on that question? Sorry,
yeah.
Can I? Because there's trust, at least superficial trust in the U.S. dollar, even the yuan.
Yeah.
Let's assume Zimbabwe does the same thing, and puts gold, partially backs their currency with gold. Is that the same thing? I'm just expanding on it. The original question: can any currency back it with gold, and do it? Because you touched on the trust issue. Like I'm very complex the way I'm trying to approach this question. Is it different if the U.S. starts backing its gold versus China versus Zimbabwe, for example?
I'm on the record for saying that gold standards suck. Okay. Gold is great. A gold standard is some sort of representation of gold. The dollar used to be redeemable in gold. So if you're talking about fully redeemable currencies, the classical gold standard, there was 100% reserve. The Treasury, for every $20 bill that was in circulation, there was a $20 gold piece in the vaults. And so you could take your currency. By the way, in my first book, that's where I started this sort of one-man war on educating people the difference between currency versus money. Aristotle was the first person to define the key attributes that something had to have to be considered money. It's got to be a medium of exchange, a unit of account, but most of all, a store of value. And the very design of national fiat currencies that are borrowed into existence, the math says that they absolutely must lose value over long periods of time. But what was the question again?
No, it's a very complex question. I was like, what would happen if any currency were to back it with gold? But I think there's different levels, like Zimbabwe versus China versus the US.
Well, it would be sort of a reverse Gresham's law. Gresham's law says bad money chases good money out of circulation. And what would happen is people would want to be spending all of the bad money, the currency of the countries that aren't backing with gold. So they'd be going to the currency exchanges and trying to sell the unbacked currency and exchange it for a currency that is backed by gold and more trustworthy. It requires, though, a really catastrophic event where there's a lot of fear and everybody is seeking safety. And then you will get this reverse Gresham's law.
Maybe short answer, would US dollar investors buy Chinese yuan if the yuan was all of a sudden gold backed?
It's entirely possible, isn't it? I mean, yes, but the US dollar investor can also buy gold.
Yeah.
That's the same thing as exchanging. You're exchanging your currency for money.
Yeah.
I find it interesting that you can take these pieces of paper with numbers and pictures of dead guys on them, and you can actually buy something real with it. If you take a look at all of these national fiat currencies, it's a piece of paper that's been ruined. You can't even use it to write a list on it because it's got all this ink on it already with just digits. And, most, only about 1 out of every $10 that exist is created by the Federal Reserve. The other 9 are created by the banks. All of them, with the exception of the currency in circulation, the dollars that are in your wallet, are just typed into existence. They don't even bother to print them. So when they say they're printing currency, no, they're typing currency. So you've got to ask yourself, how many numbers are there? Because that's the limit to what they can print. How many numbers are there? It's infinite. And so, right. And so what is the value of the dollar is the inverse of that. And if the dollar used to be worth 1/20th of an ounce of gold, and now it's worth less than 1/4000th of an ounce of gold. And so it's already lost more than 99% of its value since the Federal Reserve became the custodian of the dollar's value.
Absolutely. Mike, what a wonderful conversation. We'll have to do this again soon. Maybe virtually we can expand on some topics, stable coins. Really curious what your thoughts on that are, but we'll have to do that next time.
One thing I do want to say before this ends, though, is Robert Kiyosaki always used to say that investing is a team sport. And before you invest in stocks or anything other than physical gold and silver, you need to build a team, and you can do that by subscribing to a newsletter with people that know what they're doing. So
appreciate that. Really appreciate that, Mike. Where can we send our audience to follow your work?
Okay, well, if you just do an internet search for Mike Maloney, you'll find my YouTube channel. It's Gold Silver. And I've got a precious metals dealership called goldsilver.com.
Fantastic. Awesome. Mike, thank you so much. It was a great pleasure having you on.
Thank
really
you.
appreciate it. Everybody else, thank you so much for tuning in. Much appreciate you watching here from the floor of the New Orleans Investment Conference. Make sure to stay tuned and hit that like and subscribe button. Helps us out tremendously. Thank you so much for tuning in. Take care.